right? So today's chapter is incomplete records. That is chapter 9 in our syllabus, right? So this is important because from the incomplete records, we will be learning several important things, right? This has two parts. Incomplete records has two parts, right? One is, let me take a minute. Right. Okay. So incomplete records in this, especially in our exam questions, they might check two different areas. Okay, one is identifying the profit, calculating the profit, identification of profit figure. This is number one. The second part is preparing financial statements, right? So the questions will be based on number one, identifying the profit. The second part, second type of question is preparing financial statements, right? So if you take the paper, if you take our A-level paper, right, most of the MCQ questions, right, the profit calculations will be checked in the MCQ part, right? And identification of profit losses and preparing ledger accounts, those parts will be checked in the second paper, right? Financial statements. Okay, right. So what is mean by incomplete records? Incomplete records means it refers to a situation where the organizations are not using the double entry bookkeeping, right? They don't have a proper double entry system. Then what happens? They don't maintain ledger accounts. So it's very difficult to find out the profit or loss of the company or the business, right? So most of the times what happens is when we look at these small shops, small businesses, small and medium scale businesses, they don't maintain proper set of books. So you will get all the bills, documents, single entries. So from that, we have to prepare the complete set of books, right? You take that and prepare, take those information into double entry system, and we have to prepare the financial statements. Okay. So the main purpose of a business is to earn profits, isn't it? Right? The main objective of a business is to earn profits, right? So the owners or the objective of the management or accountant is to identify the profit. So if you have an incomplete records, if you get incomplete records, there are two methods that you can identify the profit. There are two methods we can identify the profits, right? So method one is using the accounting equation. Method one here, method one. Using the accounting equation, we can calculate the profit, right? Method two is using the ledger accounts and ratios. Those are the two methods. So the questions are based on these two methods, right? So first, I'm going to explain profit calculation using the accounting equation, right? So what is the accounting equation? What is the accounting equation? As you all know, accounting equation. Can someone tell me the accounting equation? Yes. Yeah. Right. That's correct. Assets equals capital plus liabilities. That's right. Assets equals capital plus liabilities. Now, when the business is having a profit, the profit will be added to the capital. So we can expand this equation. Assets equals capital plus profit plus liabilities. Okay. Then how do you calculate profit? Profit equals income minus expenses. Then we can expand assets equals capital plus income minus expenses plus liabilities, right? Then this minus expenses, to make this as a plus, what we can do is change the sign. So we derive the equation assets plus expenses equals capital plus income plus liabilities. So we know this equation. Assets plus expenses equals capital plus income plus liabilities, right? Then there is another equation for profit. Profit equals profit or loss. What is the equation for profit or loss using the capital? Yes, who can tell me the equation for profit? I explained this at the first class. Profit equation. using capital. Using capital. Right. I'll show you how to get it. So this is how we develop the profit equation, right? Net profit equals, yes, correct. Closing capital minus opening capital sorry, right? This is how we derive the equation, right? I was explaining this the first class, and in accounting equation we did this part, right? So simply you can remember this: net profit equals closing capital or net asset minus opening capital plus drawings minus additional capital, right? So write it down. Profit or loss equals closing net asset. Net asset means capital minus opening net assets plus drawings minus additional capital. So this is how we calculate the net profit. Closing net asset minus opening net asset plus drawings minus additional capital. So let's look at some example questions. Okay, so this is example 1. Can you all calculate the answer that I'm explaining from the basic? Okay, hope then you will understand everything. Okay, can you all calculate the profit for the year based on the above information? Profit. You have capital, 1st April, additional capital, liabilities, total assets. Find out how much is the profit. Find out the total profit. You need to take the closing net asset minus opening net asset. Closing net asset means closing capital. They have not given the closing capital amount, but assets and liabilities values are given. So asset minus liabilities will be the capital. Closing net asset. Okay, so 987 minus 75. Right, 987 minus 75. 912 is the closing capital. Okay. Minus open capital is 750. plus there is no additional capital minus, so there is no drawings, additional capital is 50. So the profit will be 912 minus 750 minus 50, 112,000. So answer is 112,000. Right? I hope you all understood. That's a simple question. Okay. If you all have any doubts, ask me, I will explain. So let's move to another question. Right. Give me the answer for this. Example 2. The following information was extracted from the list of Rose traders. 31st March 2018. 1st of April capital. Profit is given. Liabilities and drawings. Calculate the value of total asset as at 31st March. Right? So this is the thing. Now sometimes they will ask you to find out the profit. But sometimes they will give you the profit and they might ask you to find some other things. Right? Mainly the assets or liabilities at the end. Okay. Can you all find out the answer for this? Right. $650. 1075. Okay, so I got different answers. Let's check the answers. 1075. Okay, cool. So profit is here. Profit for the year is 175. So we put it there. Closing net asset. How do we find closing net asset? Closing assets minus closing liabilities. Closing assets minus closing liabilities. So here the closing asset value is unknown. So we can put it as X minus liabilities. It's 425. 425 is liabilities. Opening net asset means the capital 500 plus drawings 25 minus there is no additional capital. So we need to simplify this equation. Find out X. Right? This is the asset. X means asset. This is assets. Now it's easy. Right? 175,000 equals X minus 425 minus 500 plus 25 minus 0. So we can keep X in one side and take everything into the other side. Then what happens? 175 minus 425 becomes plus 425. Then minus 500 becomes plus 500. Plus 25 becomes minus 25. So it's 1075. X is equals to 1075. So let's do this question. So especially when you are doing incomplete records, one of the important point that you need to understand is the profit margin and markup. Profit margin and markup. Okay, so I have already given some explanation on profit margin and markup. If you missed that, I will share that again. Okay, if you all have any doubts, you can clarify later. Okay, let's do this question. A very important question, right? 2013, part 1, question number 14. The entire inventory of a company held at 31st March 2013 was destroyed due to floods. Entire inventory. The following information is provided for the year ending 31st March 2013. So we are preparing for 31st March 2013. It is the policy of the company to sell goods keeping a markup of 20% on cost. That means if the cost is 100, profit is 20. If the cost is 100, profit is 20. So that is what it says on cost. On cost, cost 100, profit 20. Okay, so we have some information. Inventory, purchases, purchase return, sales, selling expenses. What is the value of inventory destroyed? So if you get a question like this, right, identifying the closing stock, identifying the destroyed stock, prepare the trading account as a working. Prepare a trading account. So it has sales. So sales amount is given. Sales return, no, sales return is not given. Then opening inventory given, purchases return, and from the sales you can find out the gross profit or cost of sales. From that you have to take the closing inventory value. Can you all tell me how much is the closing inventory which was destroyed due to the flood? Okay. 2 minutes. Okay, so let's do this question. Now we have inventories. Inventory 1st of April. That is the opening inventory, 1,500. Right? Then the purchases, 3,500. Purchases return, 500. Sales, 4,800. Right. So selling expenses we don't take. It's not. It doesn't come under trading. Selling expenses doesn't come under trading, so we don't take. Okay. Now we need to find out the gross profit or the cost of sales. So we can find the closing inventory. Now the total of this, let's take them. Total of this 4,500. Now we need the closing inventory which was destroyed due to the flood. Okay. Now the clue that they have given is this 20% on cost. That is the clue that they have given. 20% on cost. That means now we have to do a small working for this. We will do a small working for this. That means if the cost is 100, profit is 20, selling price is 120. Based on this, right, we derive this equation. We write down this cost plus profit equals sales. Okay. Now in our question, what do we have? Do we have the profit? Do we have the cost of sales? No, we don't have these two, but we have the sales value. Sales value is 4,800. So we put it here, right? If the sales value is 4,800, how much will be the profit? How much will be the profit, right? So 120 means 20, 4,800 means how much? So that is a simple calculation. So we call it cross multiplication, right? Cross these two and multiply by this 4,800 divide by 120 into 20. Then you get the profit. Then you can get the profit. So how much is the profit? 4,800 divided by 120 into 20. Profit is 800. So if the profit is 800, cost of sales is how much? Cost of sales is 4,000. 4,800 minus 4,000 is 800. Right? Then if this is 4,500 and net value is 4,000, how much is the closing inventory? Very simple. 500. 4,500 minus 500 is 4,000. So answer is 500,000. Is it clear? Right. So let's move on to another question. Let's move on to another question. Any doubts? Did you all understand? So let's do the gross profit again. Yeah, gross profit is we have to use this formula. Now they say on cost 20%. Then if the cost is 100, profit is 20. So selling price is 120. If the cost of sales is 100, they will keep a 20% margin on the cost and selling price is 120. Then you look at the question. We have the selling price, the sales value. If the sales value is 4,800, you can find out the profit, right? 4,800 divided by 120, multiply by 20. So you get gross profit. Right? Is that clear? Okay, so move to another question. Yeah, there's a doubt. The example you used shows 20% can be used in any. Can we use this for any question? Yes, you can use this for any question, but only thing is you have to see whether is it on cost or on selling price. If they say selling price, then sales will be 20, profit will be, sorry, sales will be 100, profit will be 20, cost will be 80. If they say 20% on selling price, then sales will be 100. If they say 20% on cost, cost will be 100. That's the difference that you need to understand. Yeah, closing inventory is 500. Now this is 4,500. Net is 4,000. So difference is 500. That is the closing inventory. The closing inventory entirely, that entire amount is destroyed. If the entire amount is destroyed, the closing inventory is the value of destroyed. Okay, let's go to another question. Right, this is 2012. 2012 part 1, question number 32. During the year, the assets of a sole trader increased by 400,000. Assets increased by 400,000 and the liabilities increased by 50,000. If the profit for the year was 250,000, how much additional capital was introduced by the owner? What is the additional capital? Tell me the answer. sorry, let's say the assets increased by 400,000 from 0 to 400,000. Liability increased by 50,000. Okay. Then if this is 400, this is 50. What is the equity? Because 400,000 equals equity plus liabilities. Then this is increased by how much? 350,000. Increased by 350. Then what the same profit is now in this profit part is 250,000. Right? Equity increase. Equity can increase in two methods. Remember, equity can increase in two methods. Number one, profit. If the profit increases, equity will increase. The second one is additional capital. If the owner invests more capital, the equity will increase. So out of this 350, 250,000 is profit. Right? And the remaining is the additional capital. So how much is additional capital? 100,000. So answer is 100,000. Is that clear? Okay. Next. This is 2012, part 1, question number 39. A similar question, right? What we did before. Let's see. Amal Traders lost its entire inventory as at 31st March 2012 due to a fire. This is also same like the earlier one. Previous one was it's due to the flood. This is fire. An entire inventory is lost. The information available on that day is as follows. Inventory 1st of April, 200,000. Purchases, sales. Then the profit. The firm's gross profit margin on sales 20%. 20% on sales. See, I told you. Previous one is 20% on cost. This one is 20% on sales. Okay, find the answer. The same method. You can use the same method. Okay, what is the answer? Sales for the year 2 million. I'll do in thousands. Inventory 1st of April 200. Purchases 1,500. Right? And there is no returns or anything. So this is 1,700. Okay. Right. So 20% on sales means sales 100, profit 20, cost is 80. Right. Sales 100, profit 20, cost is 80. On sales, you have to go this way, this side. Okay. If the sales is 2000, if this is 2000, how much is the profit? How much is the cost? So this is very simple. Right. 2000 divide by 100 into, let's calculate the cost. Okay. Let's calculate the profit. Okay. 2000 divide by 100 into 20. So as I said earlier, this is called cross multiplication. Cross multiplication. So we get 400 as the gross profit. Gross profit is 400. Then what is the value of cost of sales? 1600. 2000 minus 4, 1600. So closing inventory is 100. Closing inventory is 100. Okay. Then the question, what is the value of inventory destroyed due to the fire? It's 100,000. Value of inventory destroyed by the fire is 100,000. Then the next question is, what is the net impact on total assets of the company as at 31st March 2012 if an insurance company agreed to indemnify means reimburse or settle, pay 80% of the value of the inventory? So what happened to the total assets of the company if insurance company agreed to pay 80%? Right, let me show like this. Now equation is assets equals equity plus liabilities. Okay, that's the equation. Right, so what happens for this transaction? What happens if the stock is destroyed or damaged? Our stock will reduce, inventory will reduce by 100, and we will get a insurance of 80%. So out of 100, we get 80. Right, so stock minus 100, insurance receivable will be 80,000, and the loss is only 20. So this is how we show that. So net impact for the asset is how much? Minus 100 and plus 80 means net impact for the asset is only 20,000. The loss of asset is only 20,000 because we are getting insurance of 80. Even though the stock loss is 100, right? Stock damage stock is 100, we are getting 80 insurance. Is that clear? Okay. Moving to the next question. Right. So this is 2010, part 1, question number 8. What was the profit earned for the year ended 31st March 2010 based on the following information of sole proprietorship? There is equity 500,000, total assets and liabilities 800 and 200, drawings 30,000. Tell me the answer. What was the profit earned? You need to find out the profits. Okay. So let's calculate closing net assets, assets minus liabilities. That means 800 minus 200. Opening net assets, equity as at 1st of April, it's 500. Respectively, drawings during the year is plus 30. That's it. No additional capital. So 800 minus 200 is 600. 600 minus 500 is 100. Then 130. Very simple. 130. Okay. Right. That's not hard. Right. So next question. 2009. 2009 part 1. Question number 8. Do this. Okay. Right. Following information relates to Amila traders. 31st December 18, 1st of January 18. So this is opening. This is closing. Assets, liabilities, drawings made by the owner during the year 40,000. Assets as at 31st December include stock costing 50,000 which was sold but undelivered to customers. Right. So that is not belongs to us. What is the answer? Make it fast. $50,000 not belongs to us. 500 minus 200. Closing net asset means this closing. This is opening. Closing. 700. We can't take 50,000 because it's already sold. 350 minus opening net asset 500 minus 200 plus drawings 40. No additional capital. Then here it's 350 minus 300 is 50. 50 plus 40 is 90. 90. Okay. Okay. Another question similar to identifying the closing inventory. Cost of stock destroyed. Previous one answer is 90,000. Okay. Question number 7, the answer is 90,000. Question number 8. So let's do this question. I'll give 3 minutes. I'll give 3 minutes for you all to do this. Okay. Right. A fire took place in the stores of Ravi Traders on 31st March 2009, completely destroyed part of its stocks. So remember, in this question, it's only a part of the stock, not the entire stock. The cost of remaining stocks was 50,000. So remaining stock is 50,000. The following information are also given. 1st of March, 300,000, sales 150. Gross profit on cost of sales is 25%. On cost of sales, 25%. No purchases were made during this period. There is no purchases. Okay. So let's find the answer. So according to the information given, we can fill the details. Sales 150,000. Cost of the stock 1st of March 300,000. That's the opening balance. There is no purchases made during the year. Closing inventory is 50,000. What is the answer? Yes, anyone answer? Okay, so gross profit margin is 25% on cost of sales. Cost of sales means on cost. If the cost is 100, profit is 25, sales 125. Then sales value is 150,000. Then we can find out the profit. Profit is 150 divided by 125 into 25. Right, so 150,000 divided by 125 into 25 is 30,000. 30,000. So the gross profit is 30,000. Then the cost of sales is 120,000. Then what is this answer? 120 means this should be 170. Yes, 170 minus 50 is 120. So if this is 170, how much is stock damaged? Stock damaged is 130. 300 minus 130 is 170. So answer is 130,000. Okay. Any doubts? Did you understand? Can I get a feedback? Did you understand up now? This is how you get the questions in the paper. There is a question. Is the damage stock always closing inventory? No. Now see in this question, damage stock is not closing inventory. This is closing inventory. Damage stock is a separate item. It's not always the closing inventory. It can be in between, in the middle of the year. Okay, fine. Let's move to another question then. Right. Right. Do this question. I want everyone to give the answer. Okay. We have done lot of similar questions. So you should be able to do this. Okay. So let's find out the answer. The Columbus Sportswear Company lost the entire stock as at 31st March 2018 due to a fire. Following information was available. 1st of April, stock, purchases, sales, and the gross profit margin on sales is 45%. Stock loss. Right. So let's find the answer. Stock as at 1st of April is 100,000. Purchases 600,000. Sales is 1 million. Sales is 1 million. Gross profit margin on sales is 45%. On sales, if the sales is 100, this is 45. Cost is 55. So the sales amount is 1 million. Then profit is 450,000. And cost of sales is 550,000. This is 700, 150,000. Answer 150. Okay. So why is it sales minus gross profit to get closing? Sales minus, because sales minus gross profit means sales minus cost of sales is gross profit. So if you want to get the cost of sales, sales minus gross profit, you will get this answer. Okay. Because cost plus profit is sales. Then sales minus profit is cost. Sales minus cost is profit. But it's based on the equation. All right. Next question. Okay, I'll do this. Okay, so in this question, they ask for the revenue for the year. That means revenue means sales. Can you all do this? Okay. Right. I got few answers. Let's check. A business has compiled the following information for the year ended 31st October 2002. Opening inventory is 386,200. Purchases 989. Closing inventory 422,700. The gross profit as percentage of sales is always 40%. So profit is 40% on sales. Cost is 60. Based on the figures, what is the sales revenue for the year? So first we'll find out the cost of sales. It's 952,500. So 952,500 is the cost. Then we need to find out what they're asking sales. Sales means this amount. 952,500 is equals to 60. So divide by 60, multiply by 100. Nine 52 by 60. 1,587,000. Okay, right. Now we'll do a different type of question. Let's do this complete question on non-profit incomplete records. So here it's a complete question, right? Calculate the value of goods taken by Aruna, prepare the income statement, prepare the financial position, statement of financial position. Okay. So let's go through the question. Aruna, a sole trader, commenced his business on 1st of January 2014 by depositing 500,000 in his bank account. He did not maintain proper books of accounts. A summary of the bank statements for the year ended 31st December 2014 is as follows. Right, so financial year. So financial year beginning is 1st of January 2014 and the year end is 31st December 2014, 1 year. So he deposited 500,000, right? Received from customers, cash sales, purchase of equipment, right? Additional information. Equipment was purchased on 1st of January. Depreciation 20%. Total trade receivables 480. 40% on sales margin. Trade payables, closing balance. Personal use, the stock. Accrued rent, discount allowed, closing stock. Calculate the value of goods taken by Aruna. Prepare the income statement, prepare the statement of financial position. Okay. So let's do this question. Right. Shall we start now? Draw the income statement and the statement of financial position. So when you get a question like this, first draw the format, entire form. Number one, first step, the format. Step two, you have to do the additional information. Step three is the remaining balances, either from trial balance or the bank statement or the cash book or whatever the information that they have given. Then finally we can complete the balancing part. Okay. Right. So we'll start with additional information. Number one. Equipment was purchased on 1st of January 2014. So let's do one by one. Purchase of equipment, 650,000. It's purchased on 1st of January. Depreciation is to be provided at 20% per annum on straight line method. So let's calculate the depreciation. How much is the depreciation of equipment? Equipment depreciation. $650 into 20%. $650 into 20%. Purchased at the beginning. Purchased at the beginning. So full year depreciation will be calculated. 650 into 20% is 130. Okay. So closing balance of the equipment goes to statement of financial position. So it's equipment out of 650, depreciated 130. So 520 remaining balance comes here. Okay. So I did the depreciation of equipment and the closing balance of equipment. Let me know if you all have any doubts on this. Okay. Right. Now we have trade receivables. Closing balance is 480. Right. So we can find out from this, we can find out the credit sales. Let's prepare a trade receivables ledger account. Okay. So I'll draw a trade receivables account. There is no opening balance. Closing balance is 480,000. Closing balance is 480,000. Other transactions, this side we will have sales, and this side we will have cash. A basic format of trade receivables. Right. Sorry, there was a connection issue. So sales 2,140 credit sales. 2,140 credit sales. Okay. Then there is cash sales 440. So sales, there is cash sales 440. Credit sales 1,600, 2,100 credit sales. We divide the sales, cash sales and credit sales. Okay, right. Then the next part is Arun achieves a constant margin of 40% on sales. So that is, we will find out the cost of sales from that. Okay, that I'll do later. Total trade payables balance as at 31st December is 640,000. So similar to this, we can also find out the trade payables. Trade payables. Let's find out trade payables. Credit sales. Closing balance. There is no opening balance because started during the current financial year. Then the closing balance is how much? 640. 640 closing balance. Then other main transactions are cash and purchases. Cash and purchases. So they have given the cash payments to suppliers 1,140. The difference will be purchases. Credit purchases. Okay, so 1,780 is the credit purchases. Then purchases, there is cash purchases as well as credit purchases. Cash purchases 120. Then credit purchases 1,780. Total purchases 1,900. Total sales 2,580. Okay, right. Let's move to the next item. Aruna took away some trading stocks for his stock drawings. This is not known. We don't know. Stock drawings, we don't know how much is the amount. Accrued rent payable as at 31st December is 5,000. So let's see how much is the rent paid. Rent paid is 55 plus accrued is 5. So total 60. And this is a current liability, rent payable, 5,000. Rent payable is 5,000. Right before the rent, we have to have trade payables. Trade payables already we know it's 640, and current assets in the format you should have inventory and trade receivables and any other current assets. Trade receivables also, you know, it's 480. Okay, right. There is a small concern. There is a discount. Okay, we need to do a small adjustment here. Purchases, credit purchases, not 1,780. There is another adjustment here. What is that? Total discount allowed by the suppliers during the year amounted to 110,000. So discount allowed also, discount received. This is allowed by suppliers. That means it's a discount received. How much? 110. Discount received is 110. It's other income. Discount received is 110. Yeah, other income. Double entry. Payables account debit. Discount received account credit. Double entry for discount received. So our purchases will be 1,890. Purchases will be 1,890. If you have any doubts, you all can ask. Right? We need to take the discount received here. Okay. So let's do the last adjustment. Closing stock is 410. Say 410. Inventory 410. Just read it. Okay. And we also know the opening capital balance, that is 500,000. That was debited to cash. Okay. Now first step, the format. The second step is additional information. Then the other balances from the bank statement. Third step. So there is remaining balance, remaining payments, salaries 115, salaries 115, other expenses other expenses 180, cash drawings here. Cash drawings 72, and there is a stock drawings. We need to find out that. Bank balance 268. Now we need to find out the gross profit and stock drawings. So as per the question, it says that Aruna achieves a constant margin of 40% on sales. So let's take that calculation. Okay. 40% on sales. 40% on sales. Yes. So this is 100. Profit is 40. This is 60. Now we have the total sales value of 2580. So if the sales value is 2580, this is divided by 100 into 40. 1032. Gross profit is 1032. Then two five eighty minus 1032 means cost of sales 1548. In this balance, add these two, 1958, 1958. Then the stock damage will be 2010, 52. 52 goes here to the drawings. Stock drawings. Stock drawings 52. That will be taken to the statement of financial position. That's all. Then complete the remaining question. Net profit is 657. So it comes here. So we can complete the rest of the question. Thousand six hundred 1,670. Right. So this is how the incomplete records questions will be checked. Right. So there are some more questions I have done. I'll share those videos and presentations in the group. Right. Did you understand? Is it clear? Okay.